Hey, welcome to the channel. If this is your first time here, my name is Tyler. This channel is about trading options using the wheel strategy, but more importantly, it's about doing it in a controlled, repeatable way. No hype, no shortcuts, just a realistic look at how this actually works. And that's exactly what this first video is about. Before we get into anything technical, I want to clear something up. One of the most common misconceptions about the wheel strategy is that it's passive income, like something you set up once, collect premium, and let it run in the background. That misunderstanding is where a lot of people get hurt. So this video isn't about convincing you to use the wheel, it's about explaining what it actually is, and just as importantly, what it isn't. Because when people struggle with the wheel, it's usually not because the strategy is broken, it's because their expectations are. If you're watching this, there's a good chance you found the wheel after being frustrated somewhere else. Maybe day trading felt chaotic. Maybe swing trading felt unpredictable. Maybe you were tired of needing the market to do something right now, just to make progress. The wheel sounds appealing because it's simple. And it is simple. But simple doesn't mean effortless, and it definitely doesn't mean passive. If you misunderstand what the wheel is designed to do, you'll end up using it the wrong way. So here's the main idea that I want to build this entire video around. The wheel works when you use it for what it's designed to do. It fails when you expect it to be something that it isn't. Once you understand that, everything else starts to make sense. Now, to really understand that, we need to slow down and be clear about what the wheel actually is when you strip away the buzzwords. When I think about the wheel, I don't think about it as a trade. I think about it as a framework for how you interact with risk and ownership over time. At its core, the wheel is built around two actions: selling cash secured puts and selling covered calls. That's it. But the goal isn't the trades themselves. The goal is what those trades allow you to do. The wheel is designed to help you deploy capital intentionally, get paid for patience, and stay aligned with companies you're actually comfortable owning. You're not trying to predict big price moves. You're not trying to time tops or bottoms. You're not trying to be right every single week. You're showing up, following rules, and letting time do the heavy lifting. When done correctly, the wheel prioritizes control, repeatability, and decision-making over excitement. It's not flashy, it's not thrilling. And that's a feature, not a flaw. And once you see the wheel this way, it also becomes much easier to see what it is not. This is where a lot of people get tripped up. The wheel is not passive income. You still make decisions, you still manage positions, you still have losing weeks. It's also not a strategy that avoids losses entirely. Losses happen. They're just handled differently. The wheel is not a way to trade more to get faster results. In fact, trading more often makes wheel performance worse for most people. And it's definitely not a shortcut around patience. Most wheel blowups don't come from the strategy itself. They come from people trying to turn it into something it was never designed to be. Before we go any further, I want to pause here and talk about the part most people don't like hearing, because this is where expectations really matter. The wheel takes time. Early on, it can feel slow. Some weeks nothing happens. Some months feel repetitive. That doesn't mean it's broken. That means it's working the way it's supposed to. Boredom is actually one of the biggest challenges with the wheel. When nothing exciting is happening, people start forcing trades. They size up. They chase premium. They break their own rules. And risk is still very real. The wheel doesn't eliminate risk. It manages it through structure and discipline. If you're looking for constant stimulation, this strategy will test you. If you're willing to value control over excitement, it starts to make a lot more sense. This is also why I'm very intentional about how I want to talk about the wheel on this channel. The goal here isn't to make this exciting. The goal is to make it sustainable. The wheel is meant to discourage things like chasing quick wins, overtrading out of boredom, oversizing positions, and expecting speed instead of consistency. If you're constantly trying to make the wheel feel exciting, you're probably using it wrong. Calm is a feature, restraint is a skill, and discipline is the edge. So if you take nothing else from this video, take this. The wheel is a framework for disciplined decision making over time. If you understand what it's designed to do, you can use it responsibly. If you expect it to do something else, you eventually break it. Before you worry about returns, before you worry about account size, and before you worry about optimization, you need to understand the role this strategy plays. In the next videos, we'll break down the individual pieces, cash secured puts, covered calls, rules, and risk management. But everything starts here. Control first, patience second, results come later. If this video helped clarify things for you, that's a good sign. It means you're thinking about this the right way. This channel isn't about chasing the next strategy or trying to make trading exciting. It's about understanding risk, building discipline, and staying consistent long enough for the process to actually work. If that approach makes sense to you, you're in the right place. In the next videos, we'll start breaking the wheel down piece by piece, cash secured puts, covered calls, and the rules that keep people from blowing themselves up. Nothing flashy, just clear explanations and realistic expectations. If you want to follow along, you can subscribe, and if you have questions, drop them in the comments. I read them daily. Thanks for spending the time, and I'll see you in the next one.